What is up, everybody? This is Mike over at foos4trading.com. Today I want to have a discussion to elaborate on a video lesson I did recently going over how to short stocks that go parabolic, stocks that move 50 to 100% plus within a very short period of time. For those of you that may be newer to trading, you can make money on the downside just as much as you can on the upside in stocks. It's called short selling. So one of our favorite strategies over at Fous4 Trading is shorting stocks that go parabolic and ideally approach a major whole number resistance and or a major moving average. So two major moving averages that I discussed recently that are significant on the daily chart are the 100 and 200 simple day moving averages. A lot of traders tend to use these moving averages, which is why they tend to work in technical analysis. So I like to look for stocks that not only go parabolic and move 50 to 100%, guys, but ideally peak out at or near a major moving average, ideally being the 100 or 200 day. So look at the daily chart. The stock that I would like to use as an example is ARDM. We've been in a really hot market the past couple of months. Any type of weakness has been bought up. So you're seeing a lot of these momentum stocks like ARDM rip to the upside on really no news. This was a stock that used to trade near $7, had a major decline. We consolidated it at or around 1, and since then have bounced from about 1 to as high as 322, which is where we peaked on Friday. So from a short selling standpoint, where could you have entered a short and why? Most people might say, look at this intraday chart and say, okay, you got in over 3, which is the ideal strategy in our over-under whole number short selling short strategy, but where over that whole number could you have gotten in and why? On the daily chart, you have a major gap in this stock between $4 and $3. So once we got over $3, there was really no telling where this stock was going to peak out. So what I like to do personally is use a longer time frame, such as the weekly chart. So once I hit the weekly chart, you can see we have significant moving averages at about 580, which is the 200-day. And right exactly at 333, you have the 100-day. So it's no coincidence, everybody, that the high of this was about 328. We never made it to the 100-day moving average, which is once again a perfect example how to use these moving averages as major resistance levels. So what you want to do is get your short as close to that resistance or moving average as possible, giving you the greatest risk reward. You can see once the over under 3 failed on ARDM, this was back to about 250 within a couple hours, and even dropped to as low as 225 towards the end of the day. That being almost a 30 to 40% retracement is a pretty significant move to the downside and is one of the primary reasons why this is our favorite short selling strategy. So for any more interest in the over-under strategy, guys, follow us daily at foos4trading.com.